Good Monday morning. This is Mortgage Time by Tory, and I'm coming at you from my home office down in the Sunshine State. And I'm going to be reaching out to you every Monday morning with Mortgage Time by Tory. And I work from my home office here. I got Maximum Impact, the love of my life, and I'm just going to come at you with a few different things today. And one, I just want to touch on what's happening with interest rates in 2016. 2015, especially in December, we heard, interest rates are rising, and the media likes to play that up, and they've been doing it for years. When the Federal Reserve Board raises short-term interest rates, and short-term interest rates are based off of the Fed funds rate and prime. Fed funds rate plus 3 is prime, and when they raise that, there's always, scared that the long-term interest rates, I get phone calls from past customers, do I need to refinance, and stuff of that nature. Short-term rates are based off of a completely different index and model and factors on how they increase, and so the Federal Reserve Board controls it, and so they're going to raise its speculated short-term interest rates, the Federal Reserve Board, in 2015 4 different times. Long-term interest rates are based off of something completely different, mortgage rates. And so long-term interest rates are based off of global, worldly factors such as other economies, what other countries are doing. Russia invades Ukraine, boom, interest rates go down. Greece economy collapses, interest rates go down. China's stock market crashes, interest rates go down. And so they're also based off of the government officially stopped buying. They stopped the program, but they didn't stop doing it at all, and it doesn't look like any indications that they're going to stop buying mortgage-backed securities on Wall Street. And the federal government buys $1 to $2 billion of mortgage-backed securities every single day, and this helps interest rates to stay low and to stay steady with that. And so 2016 is forecasted to be very similar to 2015 with the large bank models out there. They're forecasted to do the same amount of refinance volume, and this stuff can definitely change with that, but 2016 interest rates are looking good. Another thing I want to talk about is TRID. We went through a process in the applications for mortgages that were taken October 3rd and after fall under government regulation that TRID has. And we just have to set the right expectation for our borrowers on the front end. I know, slamming a purchase through in 30 days is a little bit more arduous. We can definitely do it if it's a clean file, and but with stress factors and stuff of that nature heightened when we have to do a rush purchase, it can be avoided by setting the right expectations on the front end and setting a closing date that would be appropriate. So not saying we can't do a 30-day close, we can do them, but it's always better to push it out. And this is why we have to redisclose, we have to have everything ready, almost 4 or 5 days prior to when we really have to have it ready, because we have to disclose to the borrower. Let's say we're going to disclose today, we got the closing disclosure, everything's ready to go. They have to acknowledge it. Some lenders make them sign it, others they electronically do an email. And so if they get it today, we have to wait. The borrower has to review it Tuesday, Wednesday, and then we can close Thursday. And so that's how TRID works on that. Just some successes with structuring different mortgages in the last 30 to 60 days that I want to let you know about. I partnered with American Bank based out of St. Paul, and for second mortgages and structuring it sort of like an 80-15-5. And so back in the day, we were doing like 80-20s, 100% financing. Then second mortgage companies lost their tail in the housing collapse, and so then they really shied away. Well, they came back, and it makes a lot of sense for the borrower that I had. She's going to be selling her condo after she buys her house. So we structured it so she has a lower first mortgage, she avoids private mortgage insurance, and when she sells her house, she can pay it down to zero, that line of credit, doesn't pay any interest on it, and if she ever needs that money back, she has it back because it's a line of credit for 10 years. So it's a nice structuring for borrowers out there. Other thing is that I want to touch on is condo versus townhome. A lot of real estate agents, when I work with them, that they, if it's a condo, it requires a little bit more due diligence on the front end, and it might look like a condo. The listing agent advertises it. It might look like a townhome. The listing agent advertises it as a townhome, but it's a condo. And if we have an FHA borrower especially, it can be more problematic, especially if that townhome is not FHA approved. And then we do a condo questionnaire and it doesn't pass because there's more than 10% is rental. Then, if it's not caught on the front end and it's caught a week before closing, there's a lot of pain involved. And so it was many, many years ago when I worked at Wells Fargo. I had an excellent manager there, and he actually pounded in our heads how to actually do that process to avoid pain with that. And so that is something that I just want to bring to your forefront when you're if it's a condo or even if it's a townhome, to do the due diligence. Go to the county website or have a lender that you work with that does it, and see if there is a CIC in the legal address, and if it is, it's a condo, and then that's when we have to peel back the onion a little bit more. I actually closed about 3 MHFA, the Minnesota Housing Finance Agency loans, recently, and so down payment assistance, and so it's good for the borrower with that that doesn't have any money to put down, and they have to have $1,000 into the deal. But that works well, and it doesn't matter if it's in Minnesota, Wisconsin, or Florida. There's down payment assistance that are available for the borrowers out there. That's all I have. Have a wonderful week. Happy February, and with that, I'll pass.